The finance minister today announced the budget for 23-24. It's the last year of the Modi government, and before going to polls, everyone expected the major relief for the salaried and the middle class taxpayers. And it actually came out to be. The finance minister now announced that a significant reduction in the overall taxes in the new tax regime. So as you all know, we had a old tax regime where there are certain tax rates that were available with all the kinds of deductions in terms of housing loan interest, in terms of HRA, in terms of standard deduction, and the new tax regime where no of the deductions are available, but the tax rates were much more liberalized. The finance minister kind of made very clear of its intent that everyone should move to the new tax regime, to the extent that it has now made the new tax regime as a default option. Obviously, you have an option to go back to the old tax regime if you want to, but the new tax would now come as a default in your tax returns. Under the new tax regime, the slab rates have been revised to provide for a much kind of larger slabs, and therefore the overall taxes are kind of coming down for a person earning up to 9 lakhs of income. And the new regime, it would be only 45,000 rupees of taxes. Minimum exemption limit for the new slab rate has also increased from 2.5 lakhs to 3 lakhs, and also the rebate has been overall increased to 7 lakhs from 5 lakhs. Apart from this, for rich and super HNIs where the income was exceeding 5 crores, the top tax rate including surcharge was 42.73%. That has now come down to 39%, a big reduction for income earners above 5 crores. There are a couple of other provisions that affect personal taxation. Most importantly, the capital gain exemption that was available when you sell one house property and buy another house property, there was no limit prescribed. Now there is an overall cap of 10 crores when you are 10 crores of exemption when you are purchasing a new property. So we have seen some of the deals of 100 crores, 125 crores happening. For all of those deals, the capital gain exemption would not be available. In addition, life insurance policies, not ULIPs, but life insurance policy where the premium is more than 5 lakh rupees, it will be taxable in the year of receipt in terms of either maturity or surrender. And therefore, again, HNIs with such high premium policies would not stand to gain. Obviously, the maturity received on account of death to the dependents, that would not be taxable. Lastly, they also made some changes with respect to the assessment process, etc. But on an overall basis, for the individual income taxpayer, overall it's been a good budget with some of the benefits available under the new tax regime. And going forward, we'll see more and more push to the new tax regime.